Welcome, everybody. It's good to see those of you attending today. It's been a while, so glad we are connecting. So, our agenda is same old, same old. We'll be doing compliance updates, monitoring and compliance updates related to KPMG, governor's office updates, a lot of reporting updates. And as always, time for questions and answers. And please, you don't need to wait until the end. You can put your questions in chat and we will get to them as quickly as we can. So, compliance updates. Most of what we have are simply reminders because we're still getting some questions around refinance, for instance. So even though a project was refinanced, you should treat them as if they were 6.1 projects, which means 2 CFR 200 provisions have to be followed. The rest of like the eligibility, etc., that falls away. But do follow 2 CFR 200. If a project was refinanced and you have spent all of the SLFRF funds, but not all of the refinance funds, you should not proceed with closeout. When we do closeout, the closeout is for the project as a whole. So closeout should occur once all SLFRF and refinance funds have been spent. Also, if you need a waiver for procurement per our grant policy, when re-obligating SLFRF grant funds, please work with our office to make those happen. For refinance funds, unlike SLFRF, which had very definitive obligation deadline, refinance funds do not have a formal obligation deadline, but we really encourage you to get those funds obligated sooner, not later. Do keep in mind, and this keeps coming up, refinance did not change the end date that was previously established in the original legislation and through HB 24-1466 unless it was specifically included in HB 24-1465. So refinance does not mean, oh, well, we now have until 2026 to spend all the funds. You need to pay attention to what the legislation is. And even for those that were included in HR 24-1465, it doesn't automatically change the end date until the eligibility document has changed the end dates. So please work with your strategy officers. I'm sorry, I still have a hard time saying strategy officers instead of recovery officers. But please work with them to make sure that that eligibility document is trued up. So, as always, you can reach out to your OSC compliance liaison And here you see the list. Um, Ernie is still involved with governor's office closeouts as well as all of the project profiles. And Jessra is handling department closeouts. So you may see emails from her. I'm gonna turn it over to Stacy now to give us the latest and greatest on KPMG monitoring and compliance work.
Thanks, Gail. Just real quick update today. We were nearing the end of our round 2 activities the last time we met last quarter. We have now completed all of those activities with the exception of BHA and DHSEM. We are in the process of finalizing those risk assessment reports and doing the monitoring for those 2 agencies. They were a year behind in our monitoring activities, and so that piece is underway. And we have since, let's see, I think it was April, we kicked off round 3 of our risk assessment activities and monitoring. We are going back and re-examining our 2 CFR 200 assessment that we did in round 1 with all of the agencies. To date, 5 draft reports have been sent to departments. We've got another 5 agencies that should be getting reports in the next few days. And then here in the next 3 to 4 weeks, we should get the rest of the draft reports sent to the agencies. Departments will have a chance to review and respond 2 weeks. One thing we are doing a little different with our round 3 risk assessment and monitoring, once the reports are done, if there aren't any major outstanding issues, we are not doing debrief sessions with the agencies this time. We're handling that on a case-by-case basis. So more to come on that. It just will kind of depend on what the scores on the risk assessment still look like and if there are still some major areas with outstanding issues that we need to address, and we'll likely do debriefs with those agencies. So to date, draft reports have been sent to Education, DPA, Revenue, Ag, and DOC. And like I mentioned, we've got another 5 that'll probably be coming over the fence to agencies here in the next few days, and then the rest a little bit further down the line. And as always, please reach out to my team if you've got questions on those. We vet those draft reports before they get sent to the agencies. And my team will continue to partner with agencies as we're trying to implement the remaining recommendations. So we'll be in touch soon on what that looks like and how we're going to handle that for round 3. I think that's it, Gail.
Thanks, Stacy. Seth,
Hello.
hello.
All
Take it
right.
away.
Only a couple of updates from us today. So if you want to go to the next slide. First one, we just wanted to touch base a little bit on the reobligation reclassification process, just with some lessons learned and some clarification as we've gone through a few of these. So as a reminder, there's basically 2 options here. There's a reobligation. That is when you had a subrecipient under contract and you want to reduce or eliminate that subrecipient and then move that scope of work to a new subrecipient. So someone, a organization that you were working with either, no longer wants to participate, or you have a new organization that can do it better. And so you want to strip away some sort of activity from one entity and move it to a different entity. That would be the reobligation portion there. So again, that's moving a scope of work from one of your subrecipients to another subrecipient. So that's one sort of classification category. The reason that that's different than reclassification is there's just some different requirements on the reporting side to U.S. Treasury on that. We just need a certification that on a couple of things. If that's not the case, and that's a pretty narrow band, right? If you're only moving some sort of scope of work activity from one to another, if you're not doing that, then we're talking about reclassification. So reclassifications, This is when you have SLFRF dollars. Again, all of these only apply to SLFRF. They do not apply to refinance funds. But if you have SLFRF dollars that are going to be unspent by a certain subrecipient, and you want to repurpose those SLFRF dollars somewhere, we just want to make sure that it is very clear that we're meeting the expectations that that encumbrance that you're moving the funds into was already entered into and was active prior to 12/31/24. Now, some of the things that we've learned about here are one, there's a little bit of confusion about if you're moving SLFRF dollars between budget lines on a subrecipient's contract. So maybe you have one agreement with them, it's got a bottom line dollar, but in that agreement, you have a budget broken out where they're going to spend a certain amount of dollars on startup and another amount of dollars on implementation. If you were to move funds between those budget lines, but not add new budget lines, then that's generally acceptable to make that change. Again, we're not adding new scope. You're not expanding the scope of what you have contracted this participant to do. You're just going to sort of move budget internally, but maintain the same scope, the same timeline, all of that stuff. That's generally allowable. So you can make those changes. And honestly, probably won't need to fill our form out, but please connect with your strategy officer and we can verify that we won't need any documentation for you to make that type of change. Things that are not allowed are adding scope to a contract. So say they didn't use all their startup dollars, they want to add it to a different line and increase the number of beds that you can support. Well, that increases the problem because you're adding new scope and you're changing the contract into something that wasn't encumbered prior to. So that's where we would say we can't do that. If you have a contract that has both SLFRF and refinance dollars or general fund dollars or any other non-SLFRF dollar into it, but it's still a single contract, we still can't add scope to that contract, even if you specify we're only going to use refinance dollars to do these new activities. There's a little too much fungibility with the dollars, and we are concerned about the allowability of that. One workaround of that we could do there, which we're always trying to figure out ways to make this work for you all, would be if you moved your SLFRF dollar from one activity to another that was already obligated. And by doing that, you freed up the general funded or the non-SLFRF funded side of that project. What we would recommend is you have your subrecipient revert those non-SLFRF dollars, those refinance dollars or general fund dollars, back to you, and then you issue a new agreement with those reverted funds that are non-SLFRF to do the new activity. So we can work with you on that type of work, but just wanted to provide a little more clarity on some of the nuances we're discovering there. Again, really, it's about making sure that we're spending SLFRF dollars only on things that were encumbered prior to 12/31/24, and that we have a clear audit trail to prove that we did not violate that standard. All right. And then the second question, which is a little connected, is just a request for folks. So we have reversion. So if on this reversions front, if you have SLFRF dollars that you're not going to use and you're not going to reclassify them internally to that project, and you are just, you won't be using them and want to send them back to us, that's great. We can also reclassify those funds in a different project somewhere else in state government in order to make sure that we spend them and we don't send them back to the federal government. But what we're asking is that if you have reversions, if you're going to have SLFRF dollars, again, only SLFRF, not refinance dollars. If you're going to have SLFRF dollars that revert, please let us know as soon as possible. It's a lot easier for us to do that in the current fiscal year than it will be to do it in future fiscal years, mostly because we already have projects set up at DOC and CDHS for personal service expenses that they incurred prior to 12/31/24. And so it's going to be a pretty simple task on our end to take the reverted SLFRF funds from your program, send them over to first DOC, and if we overflow from there into CDHS, and have them expend those dollars on activities that occurred prior to 12/31, which would be their payroll prior to 12/31/24. That's going to be pretty easy. It'll be more difficult in future years because I gotta go find projects that have some capacity. It'll probably be capital projects in order to do this. So we're just putting the call out now. If if your project's not near complete, but you know you're going to revert some SLFRF funds, to just send those to us now. We would love to take care of that now. It'll be a lot easier for everyone involved if we were to get those spent now. Again, in that instance, we do not have the authority to like backfill you with refinance dollars or any other funding source. Just think of that as like a budget reduction of the amount that was reverted of SLFRF funds. Those are my two notes for today. Any questions on those before we move along? Great. Then I will believe I'm turning it over to Evan unless y'all know something different.
That's right, Seth. Thanks. Evan,
Hello.
take it away.
Thanks. A few reporting updates for everyone. So the quarter ending March 31st, here is where we're at. That obligation amount has not changed and will not change. Still fully obligated at $3.82 billion. Total projects also static at 253 amount, a little more spend as of last quarter at 3.677 billion. So the federal SLFRF funds are about 96% of the way spent. They are fully obligated and hopefully will continue to spend that down. In some cases, those projects don't end until the end of 2026. On the refi side, so that's a link to the governor's office dashboard. I think it's federalfunds.colorado.gov. They have on the ARPA data tab a few charts that are broken out between statewide, major program, and agency levels. So that's going to have probably the most up-to-date status on the refi side, but still looking at a total allocation there of about $1.2 to $1.5 billion. So deadlines for this quarter, the financial activity template is going to be due July 8th. So just be aware that with the holiday of July 4th and the weekend there's not too many days in July, but we'll do our best to get the updated SLFRF 001 report into Info Advantage, hopefully a few days ahead of July 1st, not a week. And in general, that reporting, especially on the federal side, has been much more simple since we've passed the obligation deadline. Performance template will be due the week after that. And then also the reobligation and reclassification requests, please have those in before the reporting cycle. So by June 30th, there's a chance we could process them into July as well. But if it's not in by June 30th, it might be delayed until the following quarter. And then this is new, please, and Seth touched on this, please also email the SLFRF mailbox with any known reversions by June 30th or just as soon as possible. We just want to make sure that we're tracking those and are aware of any funds that need to be reverted as soon as possible. So a couple notes here. I think this is similar to the office hours last quarter. Just a reminder, and again, Seth touched on this as far as reobligations or reclassifications, when there are separate forms for each of those processes. And rescoping is not allowed. So on the refi side of things, there is no obligation deadline. That was kind of the whole point of the refinance, is because we were concerned that we wouldn't be able to have the total obligation, the total allocation of $3.8 billion obligated by December 31st, 2024. There is still the expenditure deadline, which depends on the project. But everything on the refi side will still need to be spent by the end of 2026. And then a couple notes here. So the unexpended refi funds, those will revert to the general fund on January 2027, January 2nd, 2027. And the exception for that is there is a discretionary account under SLFRF closeout admin funds. Those will be available through the final reporting cycle through April 30th, 2027, but then those will also revert to the general fund if unspent on June 1st, 2027. So this is also same as last quarter. So the refi reporting in Gravity, it's very similar to the federal reporting, except it's going to mirror the revenue replacement reporting. So there's not, the discrete subawards are not reported. You'll, under that subaward column, just reporting either salaries, other, or scholarships. And I think someone has a hand up.
Hi, Evan. It's Janine. I'm over at Judicial. I have a question about your last slide. Is it
Sure.
okay if I ask? Yeah. So you were saying that any refi funds not spent by 12/31/26 revert to the general fund on January 2nd. So are we not allowed to incur costs through 12/31 and then pay out in the next, over the next month or two, like we used to be able to with SLFRF? Or does everything have to be out of core by 12/31/26 for projects that end then?
I think it's fine as long as the expenses are incurred.
Okay. I just
but-
didn't know with your January 2nd, 2027, reverting to the general fund, that it doesn't give us enough time to pay bills for
Right.
projects that were incurred. So I just wanted to make super sure before I let you off the line.
Yeah, and you'll want to reference, of course, the project itself, the eligibility document, and make sure that the end date is December 31st, 2026. But in general, then, there's usually 30 or 60 days left to pay those expenses. But you might want to have them encumbered if possible.
Oh, they'll all be encumbered for sure. It's just a
Okay.
matter of spending.
Right.
And so is there anyone who knows if it's 30 or 60, which one? Or just a name of somebody I could maybe call and ask about that. I want to give, I won't be around much longer at Judicial, and I want to give my colleagues, the right direction before I go, just in terms of what to do on that 12/31 date. The fact that it isn't, you can incur through 12/31, but you do only have 30 days to pay, or if they have 45 or whatever.
I'm sure Tammy would know.
Okay, I'll ask
So
Tammy.
I can follow up with her also.
That'd be great. Yeah, sure.
We'll have an alert coming out soon and we can just clarify those dates and timeline.
Oh, that'd be great. Yeah, thanks so much. Okay.
Okay. So let's go ahead to the next slide. So SB 25-312, that was the supplemental dealing with the SLFRF over expenditures, was signed, I think, late last month and should be booked into core through PB later this month. So that will restore the SLFRF budget and take it from refi. And those budgets will be updated, like I said, later this month, and then we will record the cash transfers on June 30th, just as dictated by the statute. And so that should hopefully clear the abnormal cash and unearned revenue balances that might still be showing up on some of those diagnostic reports on the over expenditure appropriations. So this slide we touched on during the open close training, the SLFRF specific diagnostic reports. There are the 005A, B, there's the C one doesn't exist anymore, D, E, and F. And so the idea is that these reports are run first with, run the A report first and then clear the outstanding items on that report, and that might address the subsequent reports. And so it's helpful to run these in order and just kind of check them off one at a time. The E report, the 005E report for IHE capital construction, that report was just updated, should be easier to use. Previously, there were separate tabs for expenditure and revenue, but now they're just all on one tab. And so you should see those expenditures and revenues net to zero. And if they don't, that means likely that the duplicate entries are missing or there's some other issue. And then the other point I wanted to make on this, so there might be items on these reports that are also on the regular OSC diagnostic reports. So if they're on the SLFRF diagnostic reports, then the correct contact would be the reporting team at the SOC SLFRF email box. But if they're on the OSC diagnostic reports and not on the SLFRF diagnostic reports, then that still is going to be the financial services unit within the state controller's office, and that's the DPA FAR email box. So we will monitor and communicate the outstanding diagnostic issues at some point, but please still don't hesitate to run those and get a little bit of a head start. In particular, we'll be looking at the transfer codes, making sure those balance. Also, a note here that the accounting for refinance funds is, in general, less complicated or just more standard when it comes to. It's going to mirror general fund accounting practices. So there's that note, and then the other note for IHEs, please make sure that you're clearing the balance sheet of your duplicate funds and adding the non-budget expenditure and revenue to match the budgeted activity. The other point here is that advanced payments, so generally previously granted advanced spending authority waivers are no longer valid. So some of those might have gone all the way back to the public health emergency, which ended a little over 2 years ago. I know there was some that were still effective after that. But generally, as of now, those waivers are no longer valid. And if you have any questions about advance payments, that's detailed in Fiscal Rule 3-1. It's Section 9. Some Exhibit K1 reminders. So the FAR team will be distributing the expected K1 balances around mid-September based on core. And this is similar to years past. I've got a link to the open close calendar. The due date is still October 1st, and then there's another 2 weeks where a reconciliation between the K1 and then the SB 21-288 emergency federal funds report is due in Gravity and will assist with that. And there's a link to the open close calendar as well. Here are the reporting contacts. They have not changed in quite a while.
I think Laura has a question.
Yes, Laura, go ahead.
Yeah, and this actually goes back several slides, but you had mentioned that if we feel like we're going to have a reversion to at least let you guys know the amount and so forth by June 30th. But what's the deadline to actually process any type of, for example, like any type of ITIs or anything? Do we have until like period 13 closes to close it all out and just give you guys a heads up that it's coming by June 30th? Is that what I'm understanding correctly?
I would say probably, yeah, I think that that's fine. We'll need to know so that we can do the proper reporting in the month of July. Like we'll need to know the amount and where we're moving it in July. And then, we'll have to process it as we're doing year-end closeout and make sure that it's all moved before both you and in this case, probably Department of Corrections finishes their year-end closeout work. So the sooner the better, but
Okay.
definitely, yeah, in that period of time.
Perfect. Thank you.
Yeah, and that also brings up a point as far as fiscal year period 13 close is still early August, but we really, 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 really want to limit the agency entries that are happening after period 13 close. Of course, the workflow on anything that's after period 13 will have to go through the state controller's office. But just in general, and this might be kind of aspirational, but we really hope to have no entries on the agency side after period 13 close.
Any other questions? That was a lot of information, so I want to give y'all just a minute to process and digest and ask.
I think there's one more slide with the OSC resources. Of course, the link to the ARPA page on the OSC site, the SLFRF mailbox, shared email for the reporting team, and then a calendar link as well.
Thanks, Evan.
Thank you.
Okay, one last chance, opening it up to any questions whatsoever. Well, maybe not whatsoever. Pertinent to our topic. Let me put it that way.
I don't see any questions in the chat or any hands up.
Great. Thanks, Lisa. So our next meeting will be September 18th at 3 o'clock, unless something major significant comes up, and if that happens, we'll let you know, but otherwise plan on the 18th of September. And until then, enjoy a very lovely summer. Thank you all.